Imagine the Nasdaq-100 climbs over 2 years, and the fund built to triple it actually loses you money. That is not a glitch. That is exactly how TQQQ is designed to work. TQQQ is the ProShares UltraPro QQQ. It is a leveraged exchange-traded fund that aims to deliver 3 times the daily return of the Nasdaq-100, the 100 largest non-financial companies on the Nasdaq, names like Apple, Nvidia, and Microsoft. ProShares launched it back in February of 2010. Today, it is the largest leveraged ETF in the world, with more than $35 billion in assets. On a strong day for tech, traders pile in, because if the Nasdaq-100 rises 1%, TQQQ is built to rise about 3%. Here is the key word almost everyone misses: daily. TQQQ promises 3 times the index for a single day. Every afternoon, the fund resets and rebalances, then starts fresh the next morning from a brand new base. It does this using swaps and futures contracts, not by simply holding 3 times the stock. And that daily reset is where the trouble hides. Because the leverage resets every day, your returns over weeks and months do not add up to a clean 3 times the index. In a choppy, up-and-down market, the math quietly works against you. This is called volatility decay. Picture the index dropping 10%, then gaining 10% back. You would think you are even. But after a loss, you are working from a smaller base, so the bounce does not fully recover you, and with 3 times leverage, that gap gets magnified. Consider this. From early 2021 to the middle of 2023, the regular Nasdaq-100 fund rose almost 8%. TQQQ, tripling the very same index, lost more than 30% over that stretch. Same index, opposite outcome. Now, when the Nasdaq trends smoothly upward, TQQQ can be spectacular. Over the past year, as tech roared back, it returned roughly 100%. But notice the other side. In the last 12 months alone, it has traded as high as $88 and as low as $37. That is the deal you are signing up for. It also is not cheap. TQQQ charges an expense ratio of 0.82%, more than 4 times what a plain Nasdaq-100 fund costs. And that is before the hidden, daily cost of rolling those swaps and futures. So who is this actually for? TQQQ is a short-term trading tool built for people making a directional bet over days, not a buy-and-hold investment you tuck away for retirement. ProShares itself says these funds are meant to be monitored daily. Hold it blindly through a sideways market, and decay can eat you alive. None of this makes TQQQ good or bad. It makes it a precision instrument that punishes people who treat it like a normal index fund. If this cleared up why a 3 times fund can fall while its index rises, hit like and subscribe for more no-nonsense ETF breakdowns. And tell me in the comments, would you ever hold TQQQ longer than a single day? I read every reply.